So today we're going to talk about Huya and talk about what's going on with this stock and a bit of an update. We've not talked about it for a while, and a lot of you guys recently have been asking in the comment section, can I do a little bit of an update into Huya? So for you guys that have been asking, here you go. I do read the comments, and I've actually been trying to reply a little bit more in the comments recently. Don't know if you've noticed. But today we're going to talk about Huya, and we've not really talked about this one for a while because really there's not much that's changed inside the business. However, there's been a lot of effects on the outside, a lot of them by the Chinese government and a lot of the tensions that we see with other Chinese stocks, and that's really been pushing the share price down on Huya, and I think that's the reason why a lot of people want me to kind of do a bit of an update about what's going on with this stock at the moment. And it's always really important because on this channel we are honest and transparent, and we talk about stocks when it's the good times, 12 months ago, and there was a lot of stocks that were doing really well, and it's also important that we stay around in the bad times, which obviously we're going through one of the worst crashes that we've been through, well, in recent times, and also one of the worst crashes compared to in the history of the stock market as well. So stick you through them times as well. And also it's important that, obviously, like the other day, talking about InMode and how InMode's absolutely flying, and also talk about what's not going so well and not kind of hiding it, brushing under the carpet, never talking about it again like other channels, disappearing off the scene, maybe selling it in the background and not letting everyone know. We don't do that here. We always stick to the game plan, long-term investing, see if that investment works out. And today we're going to do an update with Huya and see how that is going. And just to shout out, I don't know who it was, but if you want to own up in the comment section, go for it. One of you guys used the Trading212 link in the description, where if you join through that link, you get a free share. And one of you guys got a free share of the Meta platforms, which obviously, well done for you guys that got that share. That's a pretty decent share for just signing up and using Trading212. Obviously, Trading212 is the platform I use, so if you want to get investing, join through that link in the description and you might get a free share like Meta. So at the moment, Chinese stocks have been absolutely killed, which Huya is. Whether you look at Alibaba, absolutely demolished, as you can see on the share price, down 79%, and it's back to prices it was at, even lower than the IPO, believe it or not. I didn't even realize that. That is actually terrible. Stocks like Tencent's been absolutely killed off, as you can see here. That's the same price as it was at in like 2016. Bilibili, which is a company that's kind of close to what Huya does, and you'll see that this is, well, it went from being a $153 stock, and that's down 94%, and the same again, that's prices that it was at. Okay, we need to go further back on this one as well. This could be very close to its IPO as well. Yeah, it's actually lower than its IPO. That's absolutely bonkers. And Douyu as well, you'll see here that obviously very, very similar platform to Huya, and same again, that's been absolutely killed off, far below its IPO prices. So it's not just a Huya thing. We know Chinese stocks are being killed off at the moment. The reason why is there's a lot of regulation. There's the delisting fears going around with China. There's also the CV explosion that's happened recently. The fears of a slowing economy. There's a lot of negativity around Chinese stocks. I'm sure you're very much aware of it, and a lot of them have been killed off through 2021 and into 2022. And Huya is no exception. If we have a look at Huya right now, it currently trades at $1.87, and if we look at the IPO, that was around about $16. Same again, it's been massively sold off since then, and it was doing okay through 2019, 2020. We were up to $34, and then we had a lot of the fears and regulations start coming in, and unfortunately that's just pushed it lower and lower down. Now, in case you don't know what Huya does, it's a live streaming platform. So right here, I'm on the website watching a live stream. Someone here is currently playing League of Legends, as you can see, and you can also see at some point you might see a couple of tips that popping up as well, and that's what Huya make a lot of their money through, is the tipping side of the platform. But recently they've really been exploring it into advertising as well, which has previously been growing quite well for them. Now, unfortunately for Huya, everything was going really well with the business. If we look here on the past performance, you'll be able to see here since the IPO, the revenue was really starting to grow in a really good rate. They started pushing into profitability, as you can see here, and they also benefited massively from the CV situation, which did give them a bit of tough comps a bit further down the line. However, you'll see here that the profit did do very well through 2020. Moving into 2021, it was doing very well. But you can see here, this was certainly the point where we saw the drop off, which was the back end of 2021. And that's when we started to get hit by the first parts of regulation into Huya, and that is only going to continue, and that's going to have a massive impact. As you can see here, the revenue is forecast to decline and move from very good amounts of profit, unfortunately, into losses. Now, at the moment, analysts are forecasting that they will start recovering from this point here and start moving back into a positive direction. But you can see really the impacts that a lot of the regulation from the Chinese government has had on this stock. So what regulation has happened for Huya to be hurt this much? Well, the first one came in July 2021. Huya and Douyu were going to merge together. So this was to create the two biggest rivals, which obviously we just talked about Huya there, and Douyu, which we mentioned a little bit earlier, which is very similar to Huya, just in my opinion, just not as a good company as Huya. They were going to merge together, and if they merged together, then that would have been a lot better, because obviously they're not battling away for audiences, trying to attract them in. Also, Tencent, who is stakeholder, they would have really benefited from them, and actually Huya were actually going to pay a big dividend out at the time for the combination of Douyu and Huya. Unfortunately, the Chinese government then turned around and said that for monopoly reasons, they're not going to allow this to go through, and they blocked this deal, which was a big blow to Douyu and Huya, because this would have meant that revenue in the long term would have grown really well and the profit would have grown really well. So that was a bit of a disappointment to see that was declining, and obviously that hurt the business a little bit there. Now, there's always the point of view where you are expecting potentially something to happen. You could potentially predict that there was going to be at least one bad news that comes out, or something goes wrong for the business. That's all a part of the risk to reward. And then it was followed up by multiple things. So the next one that was hit was they limited the amount that people under 18 could play video games for only 3 hours per week. Now, that limited obviously the exposure and the interest, and obviously if you're playing video games, then potentially you go and look at live streams and other people playing the games at the time. So once again, when you've got a live streaming website that a lot of it is, from playing video games, and then your big market gets hit and they're limited to the amount of times they can play games, then obviously that will kill off kind of interest into this space. So that was a little bit of an impact. I personally wasn't as worried for this one, because I thought, well, it's still live streaming, not playing, but it's just more impact on the industry, which this was then followed up on August 2021. Then we were followed up by another one. This was on May the 8th, 2022. Basically, what Huya makes a lot of its money off, which is the tipping. It was banned for under 18s to be tipping, streaming, and also watching after 10 p.m. was also banned. So this was once again, this was the big hit into this sort of area. And when I saw this news, I was like, oh, that is a massive hit. Now, this was on the May the 8th. So actually, when you look at May the 8th, Huya by then was already down to $3. So there was a lot of negativity priced in, and this kind of just topped it off, which was not helpful at all. And when one of your biggest income then's killed off and you're very much limited, that was an absolute killer for this stock. And there was also a few other things that were put in here as well. So this was a massive impact for Huya. And then there was another impact. If that wasn't enough, basically we had the Chinese companies at the moment obviously China's having a bit of a slowdown at the moment, because there's a Chinese slowdown in the economy, advertising's being cut. And as well as that, because what is happening in China quite often is because there's a lack of take-up in the vaccination program, and also lockdowns are very much taken on quite early on in China. There's been a lot of shutdowns in places because of the CV situation, and it's really hurting the Chinese economy at the moment, and we've seen that with a lot of Chinese stocks at the moment. And that basically means that Huya at the moment, which had the tipping part of the business, really hurt, then have the other part of the business, which is the advertising part of the business, then that is massively hurt as well. So it was a double whammy for Huya going through this, and basically everything that could go wrong did go wrong for the business. And it was a bit frustrating, because as you can see, what we were talking about, before all this started kicking in through 2021 into 2022, this business was doing absolutely phenomenal. And it's so annoying, because it's, unless you was a fly in the wall when these meetings were going on, it's unfortunately something that's really hard to predict that this is going to happen. And unfortunately it did, and it's really hurt the business at the moment. And if we take at the recent second quarter earnings, I think the third quarter's out next week, I believe it is, or it's either the week after. The total net revenues was down, as you can see here, and the profit here you can see was down as well, which was hurt massively. And here are trying to make cuts at the moment to try and deal with all these impacts that they've had at the moment. And you can see here that the actual president of finance did talk about this at the moment and the impact that it's having at the moment. So that's absolutely devastating. Now, there's a couple of good points here with Huya. The good points is this: the average mobile users, or the monthly active users, did increase 7.7% in the quarter. So what we've just gone through there's so many impacts of regulation and other things going on here at the moment that it's really killing the financial performance and the way that Huya make money. The good thing is this platform is still alive. People are still using the platform and the platform is still growing. That is a good thing. When you've still got a platform that's still active and still growing, you've still got ways around it. Hopefully, the advertising starts making its way back. So maybe there's some regulation that helps a little bit. Potentially here, look at other ways to make money. They've still got an active platform to market to, which is the positive thing. So from that point of view, the platform is still doing very well. The only problem is it's had so many regulation by the Chinese government, it's hurt it. So from that point of view, that's a positive. But obviously, there's still a lot of impacts going on in the business. And here you can see the reduction in the live streaming revenue, and here you can see the impact of the advertising and revenue that has hurt the company at the moment. Now, there is one more positive I've got to say with Huya at the moment. So the positive is this: when you do look at the balance sheet of the business, you can see there's no debt to equity on here. But they do currently sit on 10.7 billion yen of cash at the moment, which is a lot. Now, what hasn't helped recently is the US dollar has been doing really strong, but you can see here that translates to 1.47 billion in US dollar. Now, when we look at Huya here, basically, let's just have a quick flick back to the Huya. So the market cap is currently 447 million. So basically, what is happening right now is Huya has more cash than what the business is worth. And that's how much that Huya has been killed off now. That just shows you how much of the impact. Basically, someone could go out and buy this business here. Let's say they go and buy the business for, $750 million. That's a nice premium on the market cap right now. And then effectively, they would buy this company for free, because then they would collect $750 million on the balance sheet. So basically, this company is trading for free. Anyone who wants to purchase this company for, say, 750 million would then walk away with 750 million, be better off buying it, which is just absolutely insane. So this kind of shows that Huya has been devastated, but this has been devastated far too much when you look at the cash balance. So that's another positive that we have here. So you can see here, Huya has been very unlucky with the amount of regulation that's been placed on it, and it is hurting the business and will continue to hurt the business until Huya finds a way to monetize in other ways. The good thing is it still does have an active platform, and it does sit on a balance sheet, which suggests that the company is massively undervalued right now, way undervalued, and should be higher just because of the cash balance that it's holding on, and also because it's got a cash balance that will help it redevelop the company as well if they need it. Potentially, buyouts, potentially if they're going to hit a few losses at the moment because of this regulation, they're all right because they've got an amazing, balance sheet that's going on there. And we know that, I always see a few people say, that is that balance sheet legit? And we know that balance sheet's legit because when we had the merger with Doyu, they were going to pay that dividend out, and you obviously wouldn't agree to the merger and then to pay out a dividend if then you knew if the merger went through, then you hadn't got the cash to pay the dividend. So we know there's some legit, that balance sheet is quite legit there. So yeah, obviously it's a tricky point in Huya at the moment. Personally, I'm still holding because I still think that the platform is still active. It's still got a good balance sheet. The balance sheet is obviously suggesting that the company's, even on the balance sheet alone, is worth more than what the company's currently trading at. So I think that the value is stupidly low at these sort of levels. The only reason I personally am not buying at the moment is because I need to see how they redevelop the company to start transitioning to back to profit and revenue further down the line to help the business move forward, because you don't have a business that does well unless you have profit and revenue growth. So I need to see how they develop that side of it. So it's a bit of a no man's land at the moment with Huya. I think it is way too sold off, and there is going to be pain at the moment because of the regulation. I think a lot of it's priced in, as you can tell from the share price. But however, even though I think there's a lot of negativity priced in and it's still an active platform and a great balance sheet, I need to see where they're going to go in the long term. So yeah, unfortunately, this has been stung massively by a lot of regulation at the moment, which is, you could kind of think, okay, think about one part of regulation, but when you have all this, and obviously this slowing Chinese economy coming in as well, it's an absolute stinker, unfortunately. So yeah, that's where we're at with Huya anyway at the moment. Not much I can kind of give apart from that's what's happening, and that's where I'm personally at. So yeah, we'll see what happens, and watch the story and see what goes on, and if they can reinvent the company and kind of push that active user platform they still have to make the company, you know, really successful. So yeah, one that I'll just sit back and watch on for a little bit and see how we go. But yeah, that's the update for Huya, for you guys wanting to see it. Anyway, hope you enjoyed the video. Anyway, guys, make sure you hit that like button, and I'll catch you in a bit.